Yeah, likewise. Are you a hot coffee or a cold coffee person?
Hot usually, but it gets cold. I've been drinking black because too much sugar in the creamer.
Yeah, I just pretty much stick to black coffee as well.
But all right, let's get into it, guys. So before I bring Jared on, let's kind of do a quick month or two at a glance and set the stage, because right now we're obviously at a major inflection point. We have the Clarity Act, and hopefully, if all goes well and they agree on it and reconcile it, that could be going to the president for signature on the 4th of July, America's 250th birthday. We have iTrust announcing stocks and ETFs, up to 10,000 different stocks on their platform. We're going to dive into that. Also, I even want to talk about some fun topics like AI agents. We have Amazon, Coinbase, and Stripe working together, making payments in stable coins. Obviously, the new Fed chair, if I didn't mention that already. And then we had Coinbase's Base launch Base MCP, where ChatGPT, Claude, you can now trade crypto with an interface and interact with DeFi. And then right before kicking off this live this morning, I saw Robinhood is now letting AI agents trade stocks and, make buys on your behalf. So a lot going on, and I'm excited to dive in. And remember that iTrust is linked right in my Twitter bio. It's the first link right in my link tree. This is where I've had my Roth IRA since 2020. If you don't have a Roth IRA, get started. That is the absolute foundation for tax-free growth, especially in crypto being an asymmetric asset class or asymmetric risk and reward. And then from there, you can, after having the foundation, you can look into premium custody, treasury accounts, and more. So anyways, Jared, great to have you back on. Tell me what's been going on in your world and iTrust, what you guys have been paying attention to, and what you're excited about.
Yeah, for sure. I mean, great to be with you as usual. For those of you that do not know me, I'm Jared Feldman. I'm the SVP of operations at iTrustCapital. iTrustCapital is a crypto platform. Our claim to fame is the crypto IRA, so offering retirement accounts for crypto. Over the last couple of years, we've broadened our horizons, most notably with the premium custody account, which is our version of a non-retirement account. And the main differentiator in the market for that PCA is the fact that unlike mainstream exchanges, it's a security first account, right? So we secure it using institutional storage providers, but arguably even more importantly, we really utilize service as a security, right? When we have people that need help, they're able to call in Monday through Friday, 7 a.m. through 5 o'clock Pacific. And, ultimately, a crypto platform can have all the institutional storage and all sorts of, great security parameters. But if you can't call in and speak with someone, oftentimes people still feel insecure. So we really take a lot of pride in the fact that we have tremendous service. In terms of what's been on our mind, we'll kind of get into different things that we'll be offering during the course of the year. We did stablecoin rewards, so we actually pay rewards on both USDC as well as RLUSD. We've done that since the beginning of the year. We started rolling those out. We'll see how that's impacted by Clarity. I'm not really sure where the Clarity Act stands right now. Right, it seems like it picks up a lot of momentum and then it just kind of dies out, and then it rears its head again, once a month or something, and then it just kind of goes back into its cave. So we'll see what happens with Clarity and how that impacts our firm. We're very nimble. We're always ready, willing, and able to comply with any laws or regulations. So we're excited to see how that plays out. And we'll be offering equities. We made an announcement and we're going to do stocks and ETFs. Our clients want to diversify. So that's certainly on our mind. And then, creating yield for our clients, getting yield opportunities, whether it's BTC or XRP. Those are really the main focuses to be able to offer yield on both of those. We'll be coming out with something for Bitcoin this summer for accredited investors, and then hopefully XRP at some point this year as well. So I'll kind of stop there. I'll kick it back over to you to see what you want me to focus on first.
Yeah, really. One question, and then we'll have Mr. J step up, is let's dive into the stocks and ETFs first. And then I want to go to AI and kind of talk about what, iTrust could be planning in the future. But from my understanding, you're collapsing everything into one account. You have precious metals, crypto, stocks, compared to, a legacy custodian where you might have to have multiple accounts, multiple brokerage accounts. different tax wrappers. So everything would be in one dashboard?
Correct. I mean, we have always had our clients we've always given our clients the ability to diversify into different types of alternative assets. And the alternative asset on our platform have really been commodities, physical commodities. We have physical gold and physical silver, and then digital commodities, which are these crypto assets, which have been proven over time are not securities. And for the most part, they are commodities. Ultimately, people want to diversify further, right? We have a lot of clients who come onto our platform to get exposure. A lot of them feel like they want to cycle back into legacy assets like stocks and ETFs. And we want to be able to give people the ability to do that on our platform. It's not just about diversification, right? There's people who have been on our platform that manage, an account with one of the institutional legacy providers, and they don't just like our app because we offer crypto. They like our app because they want to be a part of our community. And what better way to cast a wider net by offering more assets that people want, so they can, create a home for themselves on our platform across all different asset classes.
Awesome. Yeah, no, I'd be really excited for that, because right now I have an account with Fidelity, and I guess I'm thinking 5-10 years out, where you have some type of AI chatbot, and I can basically just say on iTrust, hey, take these dividends from this and reallocate into Bitcoin or buy every Friday. I think that's where we're headed towards.
We are heading toward that without a doubt. There's going to be different levels of AI baked into every fintech. There's no doubt about that. Your specific example is really interesting because as of right now, people can do a lot of this right on like Polymarket and other Web3 related apps and blockchain networks. They can have an AI agent and then basically deploy that AI agent to be able to do what that person wants, deploy different strategies, time the market, set it and forget it, all of that fun stuff. And I think that the reason why it's so amenable to blockchain technology is because it's open source, and a lot of these blockchains actually have, API libraries and developer resources and tools for you to be able to connect your AI agent to those platforms and then deploy it as you see fit. In order for us to offer something like that, we would need something that we can bake into our platform that would be able to connect into our APIs and then to be able to take direction from the client. It sounds really exciting. At this point, it's definitely not too good to be true. We've already seen that it's possible. It's just a matter of, are we able to identify something that we feel like is compliant and works from a regulatory standpoint, right? You can't forget that these are retirement accounts. Even our premium custody account still has a custodial wrapper around it that is highly regulated. So we just need to be mindful of that. But we're super into it. We're really excited about it. Anything is possible. And, the kind of scenario that you're describing is something that we could, very well see at some point in the next 18, 24 months.
Yeah, that's super exciting. And Mr. J, I'll have you step up in 1 minute. And just regarding like what you said with like APIs, we know that Coinbase launched Base MCP. So I believe it stands for Model Context Protocol. And that's basically a universal API for AI agents to use. So once you build it once and it works everywhere with the variety of platforms. So it'd be really, really cool to see that implementing chat bots. That agent can handle it. Obviously, there's probably a million security concerns I'm not aware of, but we know that money is becoming programmable. Obviously, ACH takes 3 days. Traditional finance can't do it. And that's exactly why we're seeing crypto rails being built for this. Initially, even just using stable coins with the, quick settlement, finality, etc. But yeah, Mr. J, if you can unmute, or unless I need to, let's see.
I got it. Thanks, Kevin.
Awesome. Yep.
So great that iTrustCapital finally is in New York, even though I had to leave New York to a different state so I can stay with them. I'm happy about that. But are you guys going to be able to lower the minimums in regards to how much you can put in? I know that crypto.com as minimum as $10 to a Roth IRA that we can convert to crypto. Is that you guys have that on your radar for future plans? And also, would there be an opportunity for like a be able to open up like a Roth for a child in there and be managed by a parent, of course? Anything like that in the pipes?
Great question. This second one is a lot more realistic than the first one, and I'll answer both of them, but I'll just go backwards. So a Roth IRA for a child, let's say your kid does any sort of job that generates taxable income, you can create a Roth IRA for your child. That is something that we hope to have launched in 2026. It's a big priority for us. In terms of lowering the minimums, I would never say never. We used to have a 2,500 minimum. We lowered it to 1,000. Each additional inflow is 500. Ultimately, the biggest difference between us and any one of those mainstream exchanges that allow you to contribute a lower amount is really two things. One, the fact that all of our funds are held with institutional storage, right? These mainstream exchanges don't offer institutional storage for all their clients. Most of the funds are sitting on an exchange. And then the other one is the service. The fact that we have real humans that you can call into whenever you want. Those two things combined create a floor for expenses for us that just doesn't make it realistic for us to have lower minimums. And that's been the reason why the minimums are higher. With that said, right, if someone really wants to get onto the platform, they could save up. That is an option. I know that I'm not trying to be like tone deaf with that response, but ultimately, if we're not going to lower the minimums, then that's just kind of the reality that people would have to save in order to get onto the platform. It is something that I'll continue to raise, to the firm itself and see if we'd reconsider. But that's where we stand right now.
Yeah, and I'm not asking for a dramatic drop, right? But maybe 250. A 500 get in 250, anywhere after, only because I work at a hospital. I manage surgical divisions here in New York. And I always talk about this platform, but a lot of the staff that I have can't afford. So to be able to buy in and to be able to benefit from this, I think it would be a good consideration, because I believe that there are a lot of people that would like to. It's just that $1,000 is a lot for a lot of people, especially today. And, I think it'd be easier, maybe a 500 get in and a 250 after that. A lot easier to manage versus 1,000 and 500. But thank you for answering that question. Appreciate it.
Yeah, for sure. And I'll keep pushing on that internally.
Let's kind of discuss a little bit about a lot of the hacks we've seen, and how premium custody is set up very uniquely, because I think the figure, even just year to date, we're talking $600 million to $770 million lost to hacks. And, a good 80% of that is due to phishing and user error, not necessarily protocol exploits.
Yeah, it's a really sad topic to discuss. There's billions annually that are lost due to social engineering and phishing. We've seen so many different examples and story after story after story about clients that are impacted by this. A lot of them will reach out to us and they'll say that their iTrust account was actually the only account that wasn't breached when they're socially engineered, because you can't drain an iTrustCapital account. But we see so many examples of this. We've seen examples where people get hooked up with someone to buy XRP on some random platform. They give $5,000. Their XRP goes to 700,000. They want to withdraw it, and then they have to pay another 5,000 to get it out. And then the reality is that it's not there to begin with, and they're getting scammed. We've seen examples of people reach out and they say that they're from iTrustCapital, right? So the bad actor will reach out. The bad actor will say they're from iTrustCapital. They'll even use real names of team members on our team, and they'll call from a number that is from a caller ID that's iTrustCapital. Sometimes they even spoof our number, which we're looking into addressing that. But with voice over IP technology, it's really difficult to prevent people from spoofing your number. but they'll reach out to people. They'll say they're from iTrustCapital, and unfortunately, a lot of people just aren't aware that these are social engineering attempts. And we have thousands and thousands of customers, and there's millions of people that invest in crypto. So there's a lot of targets for these bad actors to go after. And unfortunately, people are not vigilant enough, and they end up getting scammed and losing a lot of money. I mean, it really is unfortunate. And the only way to prevent it is to be just really, really aware of people that are reaching out to you. Not even answering the phone sometimes from people you don't know. And then if someone calls you from iTrustCapital or purportedly from iTrustCapital or any crypto exchange and you think it sounds weird, just hang up and call the number that is in your account to just play it super safe. That is just something that we try to educate our clients over and over again, but people still fall for it, unfortunately. And ultimately, there's only so much that we can do to prevent that, even though we certainly try our best.
Yep. Yeah, I get plenty of calls, pretending to be my bank, and I'm sure everybody else does. And even like deep fake technology is getting super scary, but I think that's a big value add on why your platform. You offer the closed loop system. You have the multi-party computation to split the keys, Fireblocks, Coinbase custody. I think all that infrastructure is really, really important.
I mean, look, we also find that a lot of these exchanges are adding more security features. And if someone tries to take a withdrawal, they'll have things that pop up saying, hey, this might be a scam, be aware. But ultimately, most of these places just let you click through it and still remove the funds, right? So if your account is breached at one of these exchanges, the bad actor gets in there, they can just bypass all those security features and just withdraw the funds, right? So having a secure closed loop system is really something that we feel like is vital, especially for people who want to diversify not just what they own, but how they hold their assets, right? Don't be that person that has all their eggs in one basket. Make sure you diversify where you hold your assets.
Yeah, absolutely. Don't just have a single ledger wallet or, a single exchange account. You have to diversify. And I self-custody as well, but you have to be so paranoid today because, you choose your hardware wallet or multiple. You have, set up pass keys, have a good password manager, back up your seed phrase. There's just a lot of responsibility. If your house burns down, do you have like a metal plate backup, or is it in a safety deposit box? So it comes with a lot of responsibility, and I do self-custody and I advocate for it, but it takes one mistake. I've had at least not a lot of funds, but one of my MetaMasks drained by approving one contract. So yeah, it definitely comes with a lot of responsibility.
And there's so many other, tidbits that we won't discuss it here, but yeah, if you're managing like a MetaMask or a Phantom, it's always a good security practice to go through your permissions. There's there's websites that you can go to where they'll pull up all the permissions that you've given for your wallets. Then you can revoke those permissions, because if those protocols are drained in the future and you've already given them certain permissions, they can potentially drain your wallet at a later date. So make sure that you're also looking into that if you use DeFi.
Absolutely. And if anybody has any questions, pop on up. I guess we could talk about, the Clarity Act briefly on where we're at. I mean, either way, I know that the odds could be 50-50, but something like this, even if it does get delayed in the worst case scenario, it has to go through. The way the space is going, we have Stripe, and they process over 1% of global GDP. They're already getting into and building, their own layer 1 blockchain. So this is happening. I just want to have that complete certainty that, XRP, Bitcoin, et cetera, are for sure digital commodities. Solana, you name it. I guess Bitcoin already is.
Yeah, I'm not really concerned about these assets being labeled as securities. We defeated the final boss, and that was Gary Gensler, right? Like he was the final boss when it came to these assets being labeled as securities. That's in my opinion. Right. If you wanted to take the other side of that bet, you would make the argument that ultimately people take over the House and the Senate and the presidency in 2029. That leads to, bringing in all anti-crypto people, and then we reignite that time period. But I think that if you look at companies like Coinbase and all these lobbyists in Washington that have so much influence, they actually do a good job of working with people on both sides of the aisle. So I actually think that ultimately people who get elected who are red or blue will be relatively pro crypto or more crypto tolerant. So I'm not really concerned about that. When it comes to clarity, I think that there is no guarantee that it passes. I think that there is a chance that if it keeps getting pushed back and delayed, and you can see that the banking lobby is trying to delay it, if it gets delayed enough and pushes into the summer, it could get to a point where people just want to wait until the midterms and focus on their campaigns, and that they just don't pass it. And then it gets readdressed next year. But then depending on the dynamic in Congress, there can be more gridlock, that even generalized gridlock in Congress can impact the crypto legislation. I think that there's a more than 50% chance that it gets passed in the next 6 to 12 months. But I also said that 6 months ago, right? And now we're at that 6-month mark, and I'm pushing out that deadline. So I am a little concerned about clarity being passed. Now, at the same time, the SEC is doing a tremendous job of creating clarity without actually having clarity passed. Meaning, during this term with this president and this SEC, we can have clarity effectively, but it just won't be set in stone the way that it would if it was passed with legislation.
Yeah, it makes sense. And I mean, banks have already been losing deposits for years. I know that they don't want yield on stable coins, but where the space is headed, even with Coinbase's market outlook at the beginning of this year, where they made a prediction of the stablecoin market cap to reach 1.2 trillion by 2028, I guess I see that being feasible. I know that would be more than a 4x for our current market cap. But just thinking about where this space is headed with agentic AI now, really using stablecoins, a variety of companies, even Amazon Web Services, it wouldn't surprise me. I think it would be a lot harder for some brand new crypto asset to get that type of market cap. But when you're thinking about fiat going digital, it's a lot more realistic.
Yeah, I mean, I would agree with that. I think that the world has been going more digital for a while. Stable coins are the killer app, the killer use case for crypto. And there's a variety of reasons why people love stable coins and why these institutions love stable coins. I always say that these institutions don't do anything out of the goodness of their hearts, right? They're not adopting stable coins because they want to do right by the crypto community. They're adopting stable coins because it saves them a boatload of money because of instantaneous settlement, more transparency in their systems, faster. There's a component of being able to free up funds that are stuck in clearing. Right now, when you do a trade and move money around in the capital markets, money gets stuck in clearing before it settles, right? T+1 is the usual settlement time for stocks and equities. So that T+1, the funds get locked up in clearing. You can't really earn yield or deploy that capital. But if you use stable coins, you can free up those funds that are stuck in clearing, which allow for billions, if not trillions, to be made on capital that's normally stuck in clearing. So there's just so many reasons why these firms want to use stable coins. And, I think that there's going to be other use cases for crypto as clarity gets passed and more people in the United States build on it.
Yeah, absolutely. So I know you mentioned that there's going to be Bitcoin yield coming for accredited investors this summer. Would you be looking at other options for accredited investors and then later, regular investors to earn yield on their assets?
Yeah, I mean, unfortunately, the main path to getting yield for investors, particularly in the US, is for accrediteds, right? If you're an accredited investor, that's typically how those yield opportunities are created. You can see the flip side of that, and you can look at like what those companies did, like the Voyagers and the Celsiuses and those companies. They made it look and feel like your crypto was getting yield, like a high yield savings account, whereas in reality, the funds were being deployed like a high risk hedge fund. And I think that the happy medium between that and then only offering it for accredited investors, which obviously seems very exclusive, is to launch like a publicly available security that generates yield. The problem with that is that most of our clients, let's just hone in on Bitcoin and XRP in particular, most of our clients want to actually hold on to the native asset, right? They don't want to convert their XRP into an ETF and then lose ownership of their native XRP. So that is kind of an impediment for launching a publicly available security to be able to generate yield, is that you got to lose access to that native token. Now, with Clarity potentially passing and the crypto industry getting more mature, there absolutely could be opportunities that are available to the general public. But everything that we've done, and I've done so much research and so many meetings looking into getting yield on crypto, everything just comes down to some sort of security that is only available for accredited investors, right? If you find something else in which people can get yield on crypto without being an accredited investor, let me know. Everything that I've seen that isn't available just for accrediteds is on DeFi. And for, if you want to look at XRP in particular, there was an opportunity, I'm not going to mention the names, but there was a wallet that let you convert your XRP into Flare XRP. And then the Flare XRP was deployed, using a DeFi protocol. And at first it was paying out like 12% yield. And then it went down to 4% yield. And then it went down to like less than 1% yield. And that was just within a few weeks. And they weren't able to deploy more than like 30 million total value locked. And then the fees were like 1%, right? So people were making like a few dozen bips on their XRP, and they were wrapping it and risking it in DeFi, right? So it's just really difficult to create yield on these assets in general. We are seeing more demand for XRP, right? Borrow demand, which does create yield opportunities, but nothing available for the general public just yet.
Yeah, that makes sense. And I know we've spoken about before, like people really need to understand if they see the next, shiny DeFi or CeFi project offering 10 or 20% yield. We just have to look back in history. Remember, I think it was Anchor Protocol offering like 20% yield and just crashing completely. So I think people just really have to vet and understand to have a long-term time horizon. Zoom out. Is it worth it to earn, 5% where you're risking it in this protocol? And wait for more mature, realistic lending products, whether it's CeFi, DeFi, or a hybrid, so that it's vetted, you understand how it works, you fully know the risk, and then you can earn your 5 to 10% per year.
I think we just need to let the market mature, right? You can't put the cart before the horse. And Bitcoin has a lot of inherent demand. There's so much demand for Bitcoin to borrow it, and that does create yield. But there are impediments to creating yield for the mass public, and those are the securities laws, right? So I think people just need to be patient, let the market develop, and we'll see what sort of opportunities can proliferate for crypto yield. But with that said, we are going to be launching Bitcoin yield available for our clients, for accredited investors, and we really hope to have that by the middle of the summer.
I have a question if nobody else has one, regarding, so I know that the community is massive. Have you been exploring any access to beyond the United States, like the UK or Canada?
People ask about it. We don't want to be like dismissive of it, but we've always just been really focused on the United States, and we have different priorities when it comes to our company, our products, our roadmap, and going international just isn't one of our priorities, right? We would have to put a lot of time and resources into, being compliant in different countries around the world. And we would rather focus on making our product more robust for folks in the United States, rather than prioritizing and putting time and effort into going international. So that's just not not something that's on our radar. We have so many things that we're scoping, so many things that we're trying to potentially add to the platform, and going international has not even been discussed, right? So that's just me being as transparent as possible.
No, I appreciate it. It makes sense. I'm not too familiar with retirement products in other jurisdictions. But yeah, Mr. J, go ahead.
So two things. In regards to access, are you guys considering, or I mean, probably because of compliance, but integrating with like platforms like Coinbase, like Kraken, Uphold, where you can transfer, like, let's say XRP to fund or contribute to the Roth IRAs? Is that something you guys have looked into, or not?
The IRS only allows you to contribute to an IRA with fiat. You cannot contribute real estate to an IRA. You cannot contribute gold to an IRA. You can't contribute crypto to an IRA. You can only make cash contributions to an IRA in cash. That's the only option.
Got it. So if XRP gets labeled a currency, would that be possible?
The IRS would have to expand their guidelines for what you can contribute to an IRA. So even if XRP was made legal tender, the IRS would still have to come out and say, yes, now we're allowing you to deposit crypto commodities into an IRA. Like right now, it's only fiat. Like that's just those are the IRS rules, and those have always been the IRS rules.
Got it. And then next question. Any rumors of an IPO?
I'm not privy to that sort of information. There's nothing that I would really be able to say or comment on that. We did a Series A, which is publicly available information, at an over $1 billion valuation back in 2021, or maybe it was late 21, early 2022. That's the only time that we've raised, at least that's been publicly made available to my knowledge. But yeah, nothing that I can announce right now in terms of an IPO.
Got it. Thanks again.
That actually gave me a question. So I'm sure you're familiar with Peter Thiel years ago with his Roth IRA story with PayPal, where he basically bought his own company shares at fractions of a penny, had a Roth IRA, and then obviously as PayPal grew or didn't IPO it, it popped off. Would there be any opportunity like that, leveraging an iTrust account for those that start their own company?
It's a good question. I mean, ultimately, we would need, through our qualified custodian, we would need to accommodate people to hold private fund shares. And you certainly can't rule that out. It's not something that is currently on our roadmap or has been discussed either, but it's certainly possible. It would just take building out infrastructure on the qualified custodian and trust side of our business that we haven't really necessarily focused on. So yeah, not available right now, but that is certainly a good idea.
Any questions, guys? Everybody's welcome. I guess, yeah, I want to know what percentage of clients have a Roth IRA versus, maybe a PCA or the new Treasury accounts. And a personal question, not financial advice, is what is your portfolio looking like today in terms of allocation?
Most people on our platform have traditional IRAs. That's the most common IRA, because that's what people are bringing over from like previous employers, right? Most people who have been working for the last 20, 30 years have a traditional 401k that eventually becomes a traditional IRA. With that said, we do hundreds of Roth IRA conversions every single month, which means we do thousands a year. People that have a traditional, they think crypto is going to go up, so they want to pay the taxes now instead of paying the taxes later. So they do a conversion from a traditional to a Roth IRA, which just adds whatever they convert, they add on that amount as taxable income, ordinary income for the year in which they convert. So we see a lot of people do that, and then a lot of people, if their income allows, contribute directly to a Roth IRA. So we have a lot of Roth IRAs. I mean, my gut says that it's probably 60% traditional, 40% Roth. So it's like, it's pretty neck and neck. But I think that's how our accounts are laid out. We have thousands of people that have premium custody accounts. I mean, a lot of people want to have their non-retirement and their retirement both on one app and one platform, which is why we created the premium custody account, because people wanted to have the same level of security in their non-retirement account that they have in their retirement account with us. So we have a lot of people that have that. And then we launched the treasury account earlier this year, which allows, if you have a business like an LLC or an S Corp, if you're self-employed, or if you have a trust through your family for estate planning purposes, people can directly own an account with their entity using the treasury account on our platform. And we've had thousands of people open up that as well. So that's certainly been exciting. And we're going to look to offer even more account types moving forward, but those have been the main focus. And in terms of my allocation, I mean, I've been in the space since 2018, so I just have certain assets that I've been hanging on to for a while. I mean, I like Bitcoin, Ethereum, Chainlink, Aave. Those are some of the main assets that I really like. There's stocks, you know, I don't want to get into like stock picking during this conversation, but there are a lot of stocks that people can invest into also, that I'm starting to believe in some of the narratives. I mean, AI is certainly a fun narrative, but I know a lot of people talk about like agriculture being a good play, semiconductors, energy, right? Like lithium. There's so many narratives over the next decade that I think that there's a lot of resources that people have taken for granted that now are going to start to become more finite resources. And I think agriculture and energy are going to be a really big conversation piece over the next decade.
Yeah, agriculture, you said semiconductors, I think, healthcare, everything coming together with AI. Another thing that I'm really excited for is now that you guys are going to be adding stocks, ETFs, a bunch on your platform, investors are going to be able to use a Roth IRA. At least how I did is I started really aggressive when I was young because I could afford to. And if I did really well in crypto, then you can always later move into something more conservative or rebalance into, some stocks and ETFs to hedge a bit or go back into the US dollar. So that flexibility to be able to go aggressive to a safe transition or dance between the market, in a trade, at least between crypto, is a minute on the platform. I guess I'm wondering, what would the fee structure look like for stocks and ETFs? Would it be comparable to Fidelity? Would it take a couple days to settle?
It'll be commission free. So it's going to be like any of the mainstream platforms, right? So it'll be commission free. Obviously someone's making money at some point downstream, right? I mean, there's introducing broker dealers and clearing broker dealers, and people are making money. These are for-profit businesses, but it'll be commission free on our platform. Our clients will be able to allocate into, we're hoping to have up to 10,000 stocks and ETFs available. So it won't be mutual funds. It'll be stocks and ETFs, at least to get started. And then what was the last question that you asked?
Oh, I'm blanking.
Yeah,
anybody?
You asked how much it was going to cost for people.
Oh yeah, and he answered that.
Yeah, and then you asked something else though.
In terms of settlement.
Oh yeah, settlement time. Maybe? Gotcha. It'll be T+1. So if someone has crypto, and they want to go into a stock, they sell their Bitcoin, they'll be able to buy a stock right away. But if they sell that stock and they want to go into another stock, they'll have to wait T+1. So they'll have to wait for it to settle. We hope by the end of the year, we'll have people be able to sell a stock and go into another stock. But there's something called a free riding violation that someone you can't sell a stock, go into another stock, and then sell that stock all in T+1. You can only go from one to the other once within T+1. Now, for us, we won't have that when we first launch it. You'll have to wait T+1 regardless, just like on a lot of these other crypto apps that offer equities. But we hope by the end of the year to have a solution for that. But if you want to go from Coca-Cola and you want to buy Pepsi, you'll sell the Coca-Cola, wait T+1, buy Pepsi. But if you want to go from Bitcoin into Coca-Cola, you'll be able to do that right away.
Awesome. Awesome. Yeah, if anyone has any other questions, otherwise we can finish up the next 5-10 minutes, but just kind of discussing the market, we're in a really just strange spot. Obviously, people say the cycles are broken. They could be right. We haven't had Bitcoin dominance crash since 2021, and that's what I consider alt season. I know Bitcoin broke into a new high before the last Bitcoin halving, but we're just in a really weird setup. Last cycle, from the top to bottom of 21 to 22, we crashed maybe like 78%. And right now, Bitcoin, I think, crashed wick to wick like 51%. But we're still closing like monthly candle bodies above the previous cycle tops candle bodies. So we're just in this like 50-50 scenario. I'm really interested to see if the Clarity Act can go through and kind of break us upward again. Kind of like when we were in June of 2021, and then we did that one more blow off top. But I mean, your guess is as good as mine. I think if even Cointelegraph shared, this could be the shallowest Bitcoin bear market in history if we hold that 60K level. But if we look like last bear market, I mean, we could see 40Ks for Bitcoin.
Yeah, but the last Bitcoin, okay, so first of all, I have to preface this by emphasizing that iTrustCapital does not provide financial advice. So I'll try to give like both sides of the coin whenever I pontificate on something. The last cycle went from 3,800 during the COVID March 2020 crash all the way to 69,000. So when you have that sort of like that sort of movement, like let's see, what's that?
And that was a boatload of, QE as well. There's a lot of things that factored into that.
Yeah, for sure. But that's like an 18x, right? And then this cycle, we did more like an 8x from 15 to 126. So I think that, if it doesn't go as parabolic on the upside, then will it go as parabolic on the downside, right? Because that's exactly what we saw this cycle. And a lot of people are saying that it'll be a little bit calmer. I mean, we crashed pretty hard from 126 down to 60K. But a lot of people are saying, hey, that they don't see it going too far below 60. Maybe it'll, bounce off 55 at some point if like the war reignites or if the market decides to really test Kevin Warsh. But they don't really see it going below that. A lot of people are saying, well, it's going to go down to as low as 40K in Q4 2026 because that's what the 4-year cycle always dictates, right? So people are making arguments in both direction. I don't necessarily have an opinion. I mean, my personal view is I'm more in the camp of like, if it didn't go up as violently last cycle, then it's not going to go down as violently. Like for me, if we saw 48K, me personally, not speaking on behalf of iTrustCapital, but if we went to 48K, I would be like shocked, right? But with that said, if we bounce off 55, I wouldn't be shocked. So what's the difference between 55 and 48? It's really not that big of a difference. So maybe I need to, readjust my mental model. But that's how I look at it, is like we're in a really weird place with the market, but we've also been in a really weird place before. Look at what's happening with the Ethereum community. Like, you think that I'm going to be surprised at this point that people are grave dancing on ETH? They did it at $6. They did it at $86. They did it at $900. And now they're doing it again at 2,100. I mean, I've seen people grave dance on ETH for the entire time, for the entire life cycle of me being a crypto investor. So I'm not going to be, shocked that people are doing that. But ETH has always figured out a way to bounce back. Bitcoin's always figured out a way to bounce back. Sol jumped off of $9. Everyone said Sol was dead, and then it went all the way up to, 260. So I think that if people are patient, that the market will come back eventually. But there's a lot of negative headwinds, folks. I mean, if you look at, people are saying that the AI bubble is going to pop. Other people are saying that it may not pop, right? We're just in this new paradigm. I think that a lot of people sleep on the fact that during 2020, we printed 40% of the fiat currency that's ever been in existence, right? 40% of lifetime fiat was printed during COVID. That's a lot for the market to reconcile, right? You're not just going to get the same S&P 500 market movement we've had over the last 100 years when you print 40% of fiat money that's ever existed in one time period within a 12-month window. So I think that there's just a lot of moving pieces, and I don't know what'll happen, but over time, most of these assets go up and to the right, but that's only if you measure over 5 or 10 year plus periods.
And I mean, either way, it's just important to have a plan. If you are invested in this crazy space, you have to have a plan for the downside, the upside, because otherwise you're going to FOMO into everything. And just the boring, ranging periods like right now. And even just looking at gold, its market cap is $30 trillion. That's 20 times bigger than what Bitcoin is. So, I mean, over, just like you said, a long enough time horizon, it is up and to the right. The high cycle top for Bitcoin, it hasn't happened since 2021 either. And even that top end there moving average is like 190,000. So like if we get that price action, which I believe we do eventually, I mean, Bitcoin without a doubt goes north of 200K. I mean, I think that's conservative over, a long enough period.
Yeah. You're kind of breaking up. I heard you, but you were like breaking up there. I'm not really sure if that's on my side or on your side.
Yeah. Let me redo my mic 1 sec. Can you hear me all right now? Testing. Okay, awesome. But yeah, no, I'm excited. I guess we can finish up, Jared, with just your overall view on agentic AI. I know the Temple blockchain with Stripe is building a lot. They built their own, blockchain network so that we're actually using stable coins to interact with APIs, all types of, web content and pages, and other MCP servers or model context protocol. I guess, where do you see the next 5 years? Because I believe that we are, believe it or not, in a 2020 setup where we're going to look back at 2030 and realize that we're in the ground floor today.
What do I see for the future of what, AI or for crypto? Or
AI with crypto, digital assets, everything.
So this is a really interesting topic because a lot of people, and I would agree that it's almost like crypto was made for AI and AI was made for crypto, right? If you're an AI agent, you're not going to go open up a bank account. You're just going to create a Web3 wallet using one of these blockchains. And if you're doing things that your human is telling you to do, you're not going to pay for these services to accomplish that using cash. You're going to do it using crypto so it can settle instantaneously and you can accomplish what your human is telling you to accomplish instantaneously. So I think that the future, and Tom Lee talks about this a lot, is the future is these AI agents tapping into crypto and creating inherent value and accrual, right? Value accrual for these blockchain networks because of the proliferation of all these AI agents. There's going to be AI agents everywhere. Is it overblown? I really don't think it's overblown. I think that there's only a small percentage of people that are utilizing AI right now, right? Some of the stuff that I use Claude for, my mom doesn't understand it. A lot of people in my life and friends who are my age don't even fully understand it. So many people are using it, but I think people who are in it feel like everyone's using it because they're online, they're on Twitter, and they're getting all the content. But regular people, when you walk on the street, if you look around the street, if you're on the street with 50 people, you might be the only person out of that 50 people using AI, right? In your world, in your cohort, in your online community, everyone's using it, but that's just a fraction of a percent of human beings. And I think that when they start to incorporate AI agents through everyday apps that people are using, people may not even know they're interacting with an AI agent. And these AI agents are going to need to be paid. They're going to need to use money to accomplish things. And blockchain technology is going to be part and parcel with that. Now, will there be like private blockchain technologies and, permission blockchains that companies use? Yes. Will all that value flow to public blockchains? No. but I think enough of it will flow that it'll lead to, another run for crypto, and it'll be, it'll go viral, and we'll see a lot of activity as a result. That's just my opinion.
No, I think you're spot on. And even with Claude, because, if you use Claude, guys, I encourage everybody to try out the connectors. You can connect to Canva or different applications, and you are using MCP in that case. A lot of people are just using AI as, a chat bot, but it can do so much more. There's going to be so much more automation. And even like Jared said, it seems like crypto rails were literally built for this, because in traditional finance, for, wire transfers and fees going through 4 banks and multiple currencies, credit card processors and their fees, it just can't operate on those rails. So we're already seeing everything being digital today, or digitized. It's not human dependent. It's all, automatic. But all right. Well, Jared, thank you so much. And guys, as we finish up, again, iTrust is linked right in my Twitter bio. I've had this account since 2020. I had a Roth IRA before that, but if you have a Roth IRA with another broker, in an index fund, that's fine. But I encourage everybody to at least have another one in the crypto space. Think about the years ahead and the decisions we make today. You can have multiple, and now with iTrust, I won't even need to have, another custodian. I used to have Vanguard, and now I just have iTrust and Fidelity, and now I won't even need Fidelity. So I really hope you guys enjoyed today's video. Thank you so much for tuning in and the questions. And Jared, thanks so much.
Yeah, be good, Kev. See you later.
If you enjoyed this video, be sure to smash the like button and let me know your thoughts down below. You can find all links to my crypto resources, including tools for charting, trading bots, wallets, portfolio trackers, and exclusive discounts right in my link tree in the video description. Thanks for watching, and I'll catch you in the next one.